halfway through the week, which means Joe Camp is on with us. My name's Brian Hendrickson. Welcome, welcome.
Thanks. Middle of the week already here.
I know. So, kind of like you said, a quick week, but also not the best week. Can you kind of explain what we're seeing? We're kind of in a funk is what I'm going to say.
Yeah, these grains are pretty well range bound. Better start for the livestock. Cattle higher here for, I think, fourth session in a row, but you do have some weakness for hogs to look at today. Some spreading back and forth between the different grains, between the soy complex and the products, meal and oil. But light volume, really a lack of fresh news. You can tell that. It's an uninspired trade here, and that's getting into what you mentioned, which is a market that's in a bit of a funk and waiting for new direction. Of course, we've been monitoring harvest progress. We're in the final stages of that. We've got a clear few days ahead of us for the most part this week after a cold Halloween yesterday, and maybe ahead of some rains across a lot of the country coming into this weekend, but that's still a few days out. And it is a market that's wanting something new to trade on here, and it hasn't gotten it yet.
I know harvest is slowly coming to an end, and we are still collecting your yield results. You can send them in at report@comstock.com. As mentioned in previous videos, I will be traveling to Indiana from Texas November 8th, and we'll be going back to Texas November 13th. I know many of our viewers are located in the Corn Belt, and if you are close to southern Indiana, I would love to come visit and do a story on your farm while I'm up that way. If you have any questions or would like to schedule, you can send an email to report@comstock.com. Let's kind of switch gears and talk about things happening in the Middle East and how that's affecting the oil market and what all we're seeing in that.
Yeah, because we've had such a lack of fresh fundamental news for the grains, a lot of the trade has been overly influenced, I would say, by the outside markets. And it does start with oil. We talk about the geopolitical ongoings in the Middle East and the escalating conflict, but one that's been largely priced into the market. And two, we're now thinking, well, what's the next shoe to drop? Do we still have further escalation with Iran, which would really bring a large supply of oil exports into play here? Do we have anything further with Russia and the war in Ukraine that would block, a key energy market there in the Black Sea? Right now, we're waiting for that to develop. So if you look at an oil chart, we're now back down to where we were when the war in Israel just broke out. And so we had immediately elevated risk premium. It led crude oil higher. It led a lot of the rest of the commodity space higher, but we've since come down to correct a little bit lower here. We're now, wondering what's the next step for crude oil, because crude oil can absolutely be a leader for the commodity space and the grains and livestock included in that, because you've got this big pool of investment capital that when it finds leadership from a commodity like oil is going to enter into the market. And a lot of times there's going to be broader diversification and some buying up when oil is going higher of these other commodities. And again, grains and livestock included. It helps, when you have oil as a part of these commodity ETFs, when the commodity index prices are rising, you're going to have more attraction to the grains and other commodities. And then not to leave out those direct links that we have with crude oil and the processing sector and the demand that we've got for, say, corn ethanol. We had another strong ethanol report out this week where we have production at a multi-month high with ethanol stocks now at an almost 2-year low. So that's a bullish storyline, but one that's already been talked about. Same with biodiesel and the soy complex, where if we do have higher crude oil prices, it's going to, hurt at the pump, but at the same time, it's going to be something that potentially drives higher the usage of soybeans as well. So, we're watching crude for some leadership here for sure.
So the stock markets are kind of signaling not so great things about the economy and consumer demand. What all are you seeing?
Yeah, just like crude oil, as it's a sort of harbinger for what's going on across the broader commodity space, we know there's an influence with the big investors, with the speculators, and even the fundamental traders in the grain space as it relates to how the stock market signals potential strength or weakness in the economy, and as you bring up consumer demand. It's one of those instances where if the stock market's selling off, we saw this, 4 weeks ago, leading up to a couple of weeks ago in particular, where the stock market was sliding lower and the livestock prices were sliding lower along with that market because speculators were ditching their long bets. They were just getting out of the market because if you talk about a weaker consumer, you're, of course, worried about less meat demand. So that's something we're going to keep a close eye on. We've gotten back to a point really where, unfortunately, bad news about the economy is bad news for the stock market, but also good news for the economy is bad news for the stock market because everybody's worried about what will the Federal Reserve do if we are strong enough in the economy or if wages are still strong enough because they're trying to fight high inflation and they have to do that with high interest rates. And that's why people are a bit spooked about interest rates staying higher for longer, and that's shown up in a weaker stock market. I bring that up partly today because we've got our latest Federal Reserve Open Market Committee meeting here this week, wrapping up today. No rate change expected for the economy's main lending rate, but we're going to sift through some of these comments this afternoon and see just how hawkish that central bank's going to remain on keeping interest rates elevated because, if you look at this stock market chart, we've come down from certainly where we were several weeks back when we were still largely in an uptrend from the start of the year. And now we're potentially turning this market on its head such that we really now need to break this current intermediary downtrend to get more confidence flowing back into major markets. I want to talk about how a lower stock market can be part of the worst case scenario for grains. But first, I want to go back to what I'm thinking about here with the Federal Reserve meeting and how it's going to impact the dollar direction in particular. And so that's one more outside market chart that I worked up for this conversation, and that's the U.S. dollar index, because we know how closely related it is to commodities because of how it impacts export potential. A higher dollar means, our grains and meat exports are going to be more expensive to global buyers. But now if we could potentially see this dollar come down from here, that's something that could turn in our favor here going forward. And it's something that ultimately links back to the interest rate storyline, because if interest rates start to ease, we can potentially have less attraction to that dollar. When you're trying to chase investors are higher interest rates, they need dollars to do it, and that's what bids up the greenback. But lately, we've seen the possibility that if monetary policy is about to shift, so could the trend for the dollar. And that's one more point about trends that I want to make is on this chart, the potential forming of a double top. Now, way early to call that, but if it were to stop just short of this recent high and then start to turn lower from here, we're potentially going to see some technical pressure overall on the market, such that it reinforces how we could maybe potentially be bullish about commodities going forward. So those three things are major outside market influences that I want to keep an eye on: the oil price, the stock market, and the dollar.
So what factors could lead it back to shifting too fundamental at this point?
Yeah, I think if we get back to thinking about the fundamentals, that's going to be a bit of the best case scenario for grains, because we are generally bullish on the way supplies are shorter, the way we've got global weather issues, which I want to talk more about, the way that demand is really firming up, that it's strong on the processing end, and something that I think can get better on the export side. And that would be the alternative, the best case, of course, to the worst case, which I said I wanted to bring up, because that's just the fact of the matter is if we go back to those, three major market influences, if I come in the morning and I see that crude oil's lower, the stock market futures are softer overnight and, the dollar's up, then I know what type of day it's going to be already for the grains. It doesn't matter what the fundamentals are. And so that's sort of the worst case scenario, is that we get into this self-fulfilling fear about recession, and the stock market goes lower and the dollar's still stronger because interest rates are higher and everybody's worried about demand. So crude oil goes lower too. That's sort of the worst case going forward. The best case is that we start to see a shift in monetary policy here, that the dollar starts to turn lower, that crude oil is still relatively strong here to lend support not only to the processing side, but to that bigger investment interest in the market. And if you see some stability now for stocks, then that's going to make people a little bit better off in terms of their attitude about major commodities. So the thing that I think allows us to get to that best case scenario where we are thinking more about the fundamentals is if we can get some better news about export demand. We talked about this a week ago, that's what the speculators are waiting for, and we just haven't observed it yet. We've come in and had a few daily export sales announcements. They're mostly routine. Some soybeans sold to China. That's good. Some corn sold this week to Mexico. That's okay too. But it's not these big purchases of soybeans that would follow that recent trade party meeting in Iowa that we mentioned. It's not corn or soy or wheat sales to China either that have been rumored to have taken place. So until we get that, it's just a holding pattern that, again, is very vulnerable to what the outside news is here. I'm waiting, though. It seems like any day now we could start to see some of those export numbers pop up to make us friendlier about prospects going forward.
You mentioned the word weather, which it's lovely. It's lovely. I feel like either it's hot and we're drought and we're talking about that, or we're talking about cold weather. What all are you kind of seeing with that?
Yeah, so weather here at home, improving in a lot of areas in terms of some moisture. Of course, too little, too late for these row crops, but in time, to potentially start to recharge some soil moisture levels for the winter wheat crop. That's come into play here when we start out with winter wheat condition ratings that are well above a year ago. Still a lot of time that those could deteriorate again or improve further. But it looks like El Nino, as it continues to take hold, could provide us a wetter type of winter, although a wetter meaning also, snowier and potentially cold and nasty too. But less on the radar, I would say right away. Are we thinking about domestic weather patterns, and now much more concerned with what's going on in the southern hemisphere, where in Brazil and Argentina, they're right in the thick of things in terms of starting off the new row crop season. And so that's worth continuing to watch. I know Matthew Cruz gives us a lot of good information direct from the source down there in Brazil. And I, keep track of what he's telling us there about the northern stretches of Brazil being rather dry, some heavy rain and flooding issues in the south, and then hit or miss on what to expect out of Argentina after they've come off of a huge drought year. Some better conditions as of late, but not out of the woods yet because of that El Nino. So that was the last graphic I did want to show up here, this conversation, and it was the South American precipitation anomaly map relative to the past 30 days. In red, you can see where they're missing out, and that's across a lot of Brazil, including some of those really key growing areas like Mato Grosso. In the south, that little pocket of overly wet weather that's causing some replanting issues here early on in the season. And so that links back to what I'm talking about with exports, which is that if El Nino continues to be a pressure on potential out of South America, that's what's going to wake up buyers to get their hands into the U.S. market and to potentially secure some more business for our U.S. grain exports. So worth watching maybe more closely now than ever would be this weather storyline going on in South America.
As we wrap up, it's my famous, I feel like I ask every one of y'all, how do you feel about everything happening right now? Are you worried? I mean, I feel like today was not, we really didn't have anything that was like sunshine, market happening. Does that worry you at all, or is it kind of normal? I mean, I don't want to say normal either. I mean,
Yeah, it is normal from the sense that, it's that time of year where we are kind of starved for fresh news, that we are wrapping up this harvest. We're generally pleased to hear from a lot of farmers that have had their harvest come in better than feared, I'd call it. But it's not like it, a year ago for most. It's not like these past couple of top crops we've been able to have, corn and soybean wise. And so it's just a wait and see type of game for me. Again, one, and first of all, whether or not those exports can develop, and maybe on that, harvest in results wise, yield as much of a big impact as it can be here in the immediate few weeks ahead. That'll be our next conversation here as we lead into next week. It would be what to expect out of this next crop report on November 9th. That'll be our next opportunity to potentially see these yields lowered again. If we do take a sizable step down on the corn and soybean yield averages, that'll be something else besides the export side, the demand end, that would really wake traders up to, I think, be more friendly. But yeah, unfortunately, no real worry, not any big bullishness that I can, espouse here. Instead, it's just wait and see for something fresh to pop up to get this market, shifted into something different.
all right, that'll do it for this episode. Thanks so much.
Thanks so much. We'll see you next week.
Want more premium content? Subscribe to the Comstock Report, where you will receive 2 reports daily. Want more video content? We are on Facebook, YouTube, and now TikTok. So don't forget to like, follow, and subscribe.